Good morning, dear student. I am Kunal Kiran from the Millennium School, Lucknow. Today, I'd like to move forward in the chapter Journal. Quickly recap the rule of journalizing under conventional rule. We have discussed under conventional rule there are three types of account: personal account, real account, and nominal account. Personal account is related to person and the rule is debit the receiver and credit the giver. Real account related to assets or properties of the business and the rule is debit what comes in and credit what goes out. Nominal account related to expenses, losses, income or gain, and the rule is debit all expenses and losses, credit all income and gains. Drawings. We have discussed at the time of accounting terms. Drawings is anything withdrawn by the owner. That can be cash, that can be goods of the business, that can be assets of the business, or any expenses paid by the owner for his personal purpose treated as drawings. So whenever owner withdraws cash, goods, assets from the business, it will be drawings. The account will be involved drawings. And if he paid any expenses from the business his own expenses, personal expenses from the business money, that is also treated as drawing. Suppose income tax paid from the business money, then two accounts will be involved: drawings and cash. So drawing receiver is owner, so drawing account will be debited and cash account will be credited. You will see. Now today I would like to my main focus is to recording of bank transactions. How will you record when the transaction involved bank checks, drafts, etc.? So bank is an artificial person. Under conventional rule, bank is classified as a personal account and it is an artificial person. It works like a person. So first transaction I am taking is when cash deposited into the bank. Whenever you are depositing cash into the bank, for example, January 1st, rupees 5,000 deposited into the bank. This is a transaction. Now we analyze the transaction and we get to know there are two accounts are involved: cash and bank. So cash is a real account. Rule of real account is debit what comes in, credit what goes out. Right now cash is going out from the business, so it should be credited. The same way bank is a personal account. Rule of personal account just now I have discussed: debit the receiver, credit the giver. Now at this stage bank is receiving the cash, it is receiver of cash, so it should be debited and the journal entry will be bank account debited to cash, being cash deposited into the bank, right? So now next is when cash withdrawn from the bank. For example, I have taken rupees 10,000 cash withdrawn from the bank. So two accounts are involved: cash and bank. Cash is a real account. Right now cash is coming into the business because you are withdrawing cash from the bank, so it should be debited. Bank is a personal account. Right now bank giving the money, so it is a giver right now, so it should be credited. Personal account rule is debit the receiver, credit the giver. Right now bank is giving, so it should be credited. And the journal entry will be cash account debited to bank account. This will be the journal entry. and narration is cash withdrawn from the bank. Now, third point is when checks draft. When I say draft means bank drafts. When checks, drafts, etc. received from the customer are deposited into the bank on the same day. For example, I have taken Mr. X, our customer, made payment through check rupees 10,000 and the check was deposited immediately into the bank. This is a transaction. So in this, whenever we say check or bank draft means bank is involved, right? So two accounts are involved, Mr. X, that is a customer, and bank, right? So Mr. X is a giver. Mr. X is a personal account. He is a giver, so he should be credited. Bank, artificial personal account. Bank is the receiver of check right now, so it should be debited. So the journal entry will be bank account debited to Mr. X 10,000, being check received and deposited, being check received from Mr. X and deposited. This will be the narration. This is journal entry. I hope it would be clear to you. Now next, this transaction, the above transaction can be also be said like this: customer paid through check rupees 10,000 and nothing is mentioned whether it was deposited on the same day or not, right? So in this case, when in the question or in the transaction nothing is mentioned, you are receiving check from the customer, but it is not mentioned in the transaction that whether that check was deposited or not. It is assumed it was deposited on same day. So the language can be like this: customer paid through check rupees 10,000. There is a two accounts are involved. Customer, check, that is bank. Whenever check or bank draft is there, means bank is involved. So customer, personal account, he is the giver of check, so he should be credited. Bank is a receiver of check, so it should be debited. Bank is a personal account, as I have already discussed. It's an artificial personal account. Now next topic is, and the journal entry will be bank account debited to customer account, bank account debited to customer account, and you will write the narration being payment received through check. Now next point is, fourth one is when check, draft, etc. received from the customers are not sent to bank on the same day. So, for example, I have taken customer has paid through check or bank draft, which was deposited next day, rupees 10,000. So, two accounts are involved, customer, and when you're receiving a check and you are not depositing, so we use a new account, that is check in hand. Whenever you receive a check and you do not deposit that check into the bank on the same day, then that check will be treated as check in hand in the business. It is same, the nature of check in hand account is real account, means debit what comes in, credit what goes out. So two accounts are involved, customer and check in hand. Customer is a personal account, he is giving check, so he should be credited. Check in hand, the check which is received but not yet deposited, it is represented by the account check in hand, checks in hand. So it's a real account, nature of this account is real account, it is coming into the business, so it should be debited. So the journal entry will be checks in hand account debited to customer's personal account. Payment received through check or draft but not yet deposited to bank. On another day, when you what the check you have received earlier, which was not deposited on the same day, now next day or any other day when you are depositing that check which is recorded in your book in the name of checks in hand, now that check is you have deposited. For that, the journal entry, for example, I have said when depositing the above check of rupees 10,000 to bank. So two accounts are involved: checks in hand and bank. So checks in hand, as I have discussed in above, real account, debit what comes in, credit what goes out. So checks in hand is going out from the business, so it should be credited. Bank is a personal account, it is receiving that check, so it should be debited. So the journal entry will be bank account debit to checks in hand. I hope it would be clear to you. Now next point is when a customer, this is my next point, sixth one, when a customer directly deposited the amount in our bank account. For example, customer deposited or paid into our bank rupees 10,000. It can be customer deposited into our bank account rupees 10,000, or language could be customer paid into our bank rupees 10,000. Two accounts are involved, customer and bank. Customer is a personal account, he is the giver, so he should be credited. This is wrongly mentioned here, sorry. It should be credit. He should be credited. It is not debited. This is wrong. He should be credited. And bank is a personal account. It is receiver, so it should be debited. The journal entry is correct. Bank account debited to customer's personal account. Right. Now next point, that is seventh number point. When a check previously deposited into the bank is dishonored. Dishonored means whenever check is cancelled by the bank due to some reason, that situation is known as dishonoring of check. That could be any reason. Maybe the person who has given you check is not having any money in his bank, so bank will be dishonored because check was bounced, right? So dishonoring means whenever the check what you have received and deposited into the bank cancelled it due to some reason, that situation is known as dishonoring of check. So whenever dishonoring take place, then what we will do in accounts, the journal entry we have passed for the depositing of check, we will cancel it in our book. For cancelling in accounts, what we used to do is we reverse the journal entry what we have passed earlier. So here for deposit, we would have passed bank account debited to customer account when we have received check and deposited on the same day. So for cancelling it, we just reverse the journal entry customer account debited to bank. If you analyze the situation, you can understand customer when he make payment through check, customer is no more in our business because customer is the person who may have purchased goods from us while we have sold goods to him on credit. The journal entry would have been customer account debited to sales account. Now customer has paid, so his account was cleared by crediting it. Now again, the moment we got the intimation from the bank that check was dishonored, so customer again become debtor in my book. So customer account debited to bank. So although it is just a reverse of the above journal entry for cancelling it, but logically if you analyze it, so customer become our debtor right now again in my books. Now next point is when a check is received from a customer and discount is allowed to him, and if the check is deposited into the bank on the same day. We are receiving payment from the customer I have given you example. We are receiving customer made payment through check of rupees 10,000 and allowed him discount of rupees 500. Now we are receiving payment from the customer and we also allowing discount of rupees 500. So three accounts are involved: customer, bank and discount allowed. Customer, right now customer is a personal account. He is the giver. He is a giver of check as well as giver of loss in the form of discount what we are allowing to him. The discount we are allowing to him is a loss for the business, and this loss is given by this customer. So he is the giver of check as well as loss, so he should be credited. Bank, it's a personal account, it is the receiver of check, so it should be debited. Discount allowed, nature of discount allowed is nominal account and it is a loss for the business. Debit all expenses and losses, credit all incomes and gains, so it should be debited, right? And the journal entry will be bank account debit with 10,000, discount allowed account debit with 1,000 and customer will be credited with 11,000. It means customer has to pay 11,000 but we have allowed 1,000, so he has paid 10,000 rupees check. So the journal entry will be bank account debited, discount allowed debited to customer account. Now suppose if the above check was dishonored, so in that case, we will reverse the journal entry what we have passed for depositing that check. So in this case, whenever the payment you have received through check and you have allowed discount, so when that check was dishonored, so in that case whatever the discount we have allowed that will also be cancelled. We pass the just reverse the journal entry. So customer account debited, discount to discount allowed debited to bank account. So customer again become debtor in your book with 11,000. He will pay in future, right?